It's always you.
Yeah.
That's the first, just assume it was you. Even if maybe it was the market or it was some of the other things, it wasn't. It was you.
It was
You're the
you.
reason why you took that loss. So figure it out so it doesn't happen again.
Okay, ladies and gentlemen, welcome back to the SimCast. We've got another fantastic trader with us today, Derrick Oldensmith, coming to us from T3Live.com. Welcome to the SimCast, Derrick. How are you?
I'm doing well. Thanks for having me.
Yeah, that's awesome, man. We really appreciate you coming on the show. Looking, for a prop firm, things looking kind of sparse. What's going on?
Yeah, well, we had a recent COVID scare, so the office is actually technically shut down. I had to get special permission to be here, so it's literally just me and one other guy on this entire floor that T3 has here.
Wow, that's
Yeah.
fantastic. Now, are you in the New York office? Is that right? Or
Yeah, I'm in our New York, Manhattan headquarter office. I've been
okay,
coming to this office for over a decade now.
awesome, man. Awesome. Well, listen, really glad to have you here. And thanks so much for getting back to us. Glad to have you on the show. Why don't you tell our viewers a little bit about yourself? And what I'd like to do is just kind of set the tone here that Derrick works for a prop firm, so he is an institutional trader. He's a professional trader. He's licensed with the SEC. So really hoping we kind of get some insights into what that's like today.
Sure. So
Yeah.
I've been a professional trader since 2008. I joined T3 specifically in 2010. So, I've been here for working towards 12 years now. I basically started with T3 at the entry level. I was just an entry level proprietary trader focused on equities. And I've been able to work myself up here at the company over the years. In 2013, I had the opportunity to start my own trading desk. So it was initially myself and two other professional traders. And over the last, I guess, 8-9 years now, I've been able to develop that into what has become T3's largest individual group of professional traders. So I currently manage, I think, a little over like 130 people on a day-to-day basis.
Wow.
And in typical times pre-COVID, probably more than half of that group would come into our headquarter Manhattan office here and be with me in person on a day-to-day basis. And then, COVID hit and we shut our offices down, back in early 2020. We set everybody remote, myself included. I actually used this as an opportunity to travel the country. I drove to California and back, staying in different Airbnbs and trading in different locations in the United States throughout almost a year and a half. It was a phenomenal experience for me before finally coming back to New York in June. So I've been back in the office for about 6 months, but it's really kind of changed the way that we're doing business as a proprietary trading company. So we have this virtual trading floor system that really makes up for the fact that we don't have everybody on the physical floor anymore. And things have gone so well for us as a group virtually that that's probably going to be the new focus going forward. So we're thinking about maybe downsizing some of our offices, really focus on the virtual thing. I got myself a place in Idaho now, a little ranch out there that I'm in love with. So I'm just going to spend half the year trading remotely out there, half the year in New York. And that's what I call the trader lifestyle. You can really do this from anywhere.
That's perfect, man. Man, that sounds awesome. Well, I mean, it makes a lot of sense. Most of work is going remotely these days, and as long as you got a good internet connection at home, I'm sure your professional traders can make it work. So
yeah, that was the key. That was the one thing when I was seeking out different Airbnbs and different places when I was doing that trip. The one thing was, how's the internet? How's the internet? The internet's
question
good.
number one.
I'm in. I'll deal with whatever bed size, whatever. I don't care what the rest of the place looks like. You need to have good internet for me.
Oh, that's awesome, man. Yeah, no, trust me, as a trader myself, I know the feeling. So listen, why don't we step back just a little bit though? I would like to get into your conversation on the virtual trading floor and the whole prop firm thing. But step us back. So you started in 2010 with T3. Was that your first foray into trading, or did you get started somewhere else, maybe as a retail trader or, on another floor, or have you always been an institutional trader?
Sure. So I've been interested in markets, honestly, ever since I was a kid. When I was a boy, I grew up in Long Island, New York. My dad owned a couple 7-Elevens out there, and both my parents worked on weekends. After school, I would find myself at my dad's 7-Elevens, and he would pay me small amounts of money to do odd, dirty jobs. He would say, here's $1, go pick up all the litter in the parking lot. Here's $1, go stack the milk in the freezer. And I would do that. And for whatever reason, as a kid, I just loved to accumulate the paper. So eventually I had a drawer full of like single dollar bills. And then my mother introduced me first to the concept of interest rates. That was back when you could have a savings account that might give you 5%.
Yeah.
And then introduced me to the concept of the stock market and said, hey, you could be an owner in a company that you have interest in. And I loved Nike sneakers. So I decided, I think when I was about, I don't know, 12 years old or so, to make my first stock investment. And I think I bought 10 shares of Nike. It was at $55 a share. And I was fascinated by the fact that I had to do these dirty jobs to earn this money. And now it was just making money like on its own. So that really kind of started my interest in markets as a kid. And then when I went to college, I went to NYU here in Manhattan. I decided by that point, I want to be a trader. So I decided to study economics and business. I also had a philosophy minor with the whole goal of, I really want to be involved in markets as what I do for a living.
Yeah.
I graduated in May 2008. So it was a heck of a time to be finishing up school and trying to get involved with Wall Street and finance in any way.
Yeah, that you're graduating when like Lehman Brothers is going down, right?
Yep, that's exactly right. So NYU is obviously a really good school. Most of the people I was graduating with, they couldn't get jobs at all. To be honest, I got a little bit lucky. I had an internship at a company that dealt in distressed and liquid assets. So they were actually expanding rapidly as a result of the financial crisis when, the rest of Wall Street was basically imploding. And I did well with the internship. So they gave me the opportunity to become a full-time junior sales trader in their new bankruptcy claims division. So actually one of the first things I worked on was the Lehman Brothers bankruptcy at that point. And it was a good business. I was glad to have a job. I learned a lot, but sales trading wasn't really what I wanted to do as a career. You're a sales trader. You're really just a middle person. I was on the phone all the time with institutions on the buy side and the sell side, trying to get them to match on price on these different illiquid securities and basically, create a commission for the company. And again, learned a lot, but I wanted to be a decision maker. I wanted to know why. If I'm speaking to these high-level institutional buyers and sellers, why is it that this person thinks that this is a great opportunity to come in and buy this distressed asset, but this other supposedly equal smart institutional investor will do anything to get rid of it and anything to get it off their books? So long story short, it was that curiosity and wanting to be more involved in the decision-making process that led to me getting involved in proprietary trading, led to me getting involved with T3. So proprietary
that was like
trading,
2 years later, right? 2010.
Yeah. So that's 2010 that I got started with T3. Again, as an entry-level trader, you have to be licensed in order to be here as a professional prop trader. And
take us back to that then, if you don't mind. Like, what were some of, like, I would say, moving from that sales trader position into like prop trading? I would imagine like the volatility there was a little bit different than sales trading. Like, did you have any adversity when you first started out in 2010?
Sure. So very different environment. I went from a business where I spent most of my time on the phone for 2 years to walking onto a trading floor where phones are basically not allowed. The traders are all communicating with each other on the desk, but there's no one's picking up phones. There's no clients in this business. The money that we're using is all internal money. It's all the company's money that's being allocated to the traders to trade with. And it was a big adjustment. I mentioned I had been interested in markets my entire life. I had done investing. I had been a sales trader. I had never done active trading. I had never done active day trading or active swing trading. And that's all of a sudden what I was doing here. And I realized I knew much less than I thought I did. And the truth is, everything I've learned about trading, I've really learned since joining T3 over the course of the last 10 plus years. And that's one of the awesome things about this company is, they have a lot of educational processes for traders who are joining the company. I had good mentorship when I was joining the company. And you also have to learn from yourself. Whether you're a retail trader, you're doing this on a prop basis, the person you're going to learn from the most is yourself by keeping good journals, doing good research, working really hard in order to become successful. But it was a big adjustment.
Well, talk to me a little bit about that, because, retail trading versus prop trading, you hear retail traders who have made it, talk about their blowups. Like, I blew this account, I blew that account. I would imagine, like, if you start out in a prop firm, like you said, you've got good mentorship, but at the same time, you've also got kind of like risk management looking over your shoulder, don't you?
Yep, sure do.
So do you think that kept you in those early days, like moving forward? How consistent were you? And who were some of your mentors, if you don't mind me asking?
Sure. So trading professionally on a prop basis is it's like trading a retail account on drugs. I don't know how else to describe it, right? The capital access that the company provides is massive, and it's a double-edged sword.
And you're talking about like in terms of leverage, right? And
yes, yeah. So a typical retail account, you can get reg T margin, you get 4x for day trading, 2x for overnight as far as leverage goes. We typically start by providing traders at 20x for day trading and 8x for overnight, and we can give you as much money as we want. So it makes risk management just so much more important, because you load up into a position at 20x and that position goes up. Sure, you're going to make a lot of money in a short period of time. You load up 20x in a position, that position starts going against you, and you don't have a game plan in place for risk management or money management, man, it's a phenomenal way to lose a lot of money in a short period of time. So I tell all the professional traders that I'm working with that what I'm doing as a professional trader is probably 85% risk management and 15% reward maximization. You show me a trader who is new in this business and they make a lot of money, congratulations, it's awesome, but I'm not impressed. Mm-hmm. Show me the trader when their ideas are failing, when their trades are failing, how they handle that. Mm-hmm. That's what separates the people who really become successful in this business from the people who do not.
It's all about risk management.
100%.
That's cool, man. So, we've interviewed one other trader from your firm, and that was Scott Redler. He was, just really grateful that he came on. Was it his style of trading or anybody else style of trading that you kind of picked up on and then made your own from those early days?
Sure. So Scott is one of the people who have been a heavy influence on my own trading, but he's not the sole person either. I've definitely learned a lot from him. We have a lot of similarities in our trading, but we have a lot of differences also. I learned from many different people. There's probably 7 or 10 specific individuals that I learned a lot from that really had a heavy influence on my trading career. And then of course it's myself, and my thought process towards trading has always been to try to learn from as many resources as possible. I've read every book I could get my hands on, followed every trading blog that you could probably list. I was just voracious to try to learn. And then what you need to be able to do is take all the things that you can learn from as many resources and as many people as you can learn from, and then put it together in the way that makes sense for you and your mind. Because we all have unique personalities. And even the traders on my team now, I can, tell you as examples, there's guys on the team who are day traders only. They don't want to keep positions overnight. They get anxiety keeping positions overnight. Who knows how the market's going to gap? Who knows what news is going to come out? And they specifically want to focus on that short-term trading, and they're very active. I've got other people on the team who are literally the complete opposite. They don't want to day trade. They don't want to fight the robots. They don't want to do short-term trading. They want to be thinking about the big picture and the big picture trends and kind of putting that together and holding positions for days, weeks, or even months at a time. Personally, I do a combination of both. I will very regularly be in swing positions that can last for a couple of weeks to even over a year. And then I'll be actively day trading around those swing positions for cash flow in the process of holding that larger core position for the bigger move that I'm actually looking for. And again, that process has just come together from learning from a lot of different people, a lot of different mentors, and a lot of different resources.
Gotcha. Yeah. Equities and options, or
I'm specifically equity focused with what I do, but I have traders in the team who trade options as well, traders in the team who trade futures as well, and T3 trades all those products.
That's awesome. Well, maybe step us through from then till now, like how your style has changed, and maybe talk us through how you put together a trade plan.
Sure. So my style has definitely evolved a lot over the years. When I first started trading, I started as a pure day trader at T3. I didn't keep a position overnight for probably the first couple of years I was at the company, but it was also a very different market environment in 2010, 11, the beginning of 2012. Um, the way I traded then was also heavily reliant on tape reading. I do. I still have tape reading as a skill, but I think it's much less useful now than it was.
And by tape reading, you're talking about just reading the level twos for the most part?
Reading the conjunction of the level two with the time and sales coming together to identify natural buyers and natural sellers in the market. I used to do short-term trading that was based on charts a little bit, based on the tape a lot, where I had a specific edge for myself the first couple of years where I was trading, where I could be pretty consistently profitable, not necessarily in a huge way. Scale came into my career over time, but I could be consistently profitable starting in a small way, more or less from the beginning, as long as I was disciplined with my money management and my risk management. And it was primarily based on the tape. And then somewhere in mid 2012, that really changed. The market environment really changed. The algorithms got a lot smarter. The algorithms got a lot better, and the institutions who are employing those algorithms got a lot smarter in terms of the way that they're executing trades into the marketplace. And all of a sudden, I hit the first major slump of my trading career. Not the only.
2012, right?
About 2012.
Okay.
Yeah. All of a sudden, it's like, hey, I lost money today. Then the next day it was like, hey, I lost money today again. And then more. Repeat. I was in a solid slump there for probably a few months, and I just couldn't wrap my head around why my strategies weren't working anymore. And honestly, this is when T3 has been most valuable to me in my career, because I was able to seek out. I remember that one of the top traders at T3 he would swing back and forth hundreds of thousands of dollars every single day. I knew he had a position in Microsoft, and I had a position in Microsoft. And this was also right when I was going through my slump, and I was about to take. I was heavier than I should have been. You're talking about risk management, how important it is. I was heavier than I should have been. I was about to tack on a really solid loss onto what had already been a slump in my career that I had been going through. And I happened to run into him on the way to the men's room in the hallway. And I stopped him and I said, hey, I know you're in Microsoft. I'm in Microsoft too. I'm about to take a loss in this position right here. And I just want to know, what do you see in this trade? Because I know you're in it also. What are you looking at? And I told him what I was going to do. And he was like, don't get out there. If you can afford the risk, I want you to give it like an extra 20 cents or so. The level that you're going to get out at, let it trade below that and watch it closely. And if you don't see something happen shortly after it trades below that level, then you probably need to liquidate your position and manage your risk and move on. I was like, oh, okay, that's kind of curious. And I went and I sat down, and the spot that I was going to get out at, I let Microsoft trade like another 12 cents below that level. And then all of a sudden I saw these big dark pool out of market prints take place, about 12 cents below level I was going to get out. And then that was the bottom for Microsoft, and it worked its way up, and it turned into, probably also because I had too much risk on, it turned into being one of the best trades I had ever had in my career until that point. And that was the start of me recognizing what I needed to do different in my trading, recognizing that, and this is, by the way, to take a half step back, the number one reason why an entry-level trader fails in trading is because of a failure to manage risk and manage money. The number one reason why a more experienced trader will fail in trading is because the market environment changed and they're too stubborn and their ego is too big to allow themselves to recognize that something changed and then make the appropriate adjustments so that they can move forward and be successful continuing with their career. Wow. So you have to recognize and be disciplined with yourself. Okay, the market environment changed. What I was doing isn't working anymore. I need to do something different. And even now, just to fast forward it, to try to make it a more relevant example, I've spoken to a lot of retail people recently who got started trading in 2020 when we had this spectacular market that culminated with this huge bubble in these speculative small mid-cap stocks, your Palantirs and your Pelotons of the world in February of 2021. And since then, a lot of those stocks are down 50 to 90%, depending upon which name that you're looking at. And I speak to a lot of these retail people who are like, Derrick, I turned a $10,000 retail account into a $500,000 retail account from 2020 into 2021. And now it's all gone. And I don't understand. And, the one thing is I really have fallen in love with markets. So I really want to continue to pursue this, but I need to be working with people who are more professional, who can help me out, who can, teach me what changed. And that's, these retail people started in a specific market environment in 2020 when we had the COVID lockdown. They learned a specific market environment, which honestly was a pretty easy environment. They're not always that easy. And then that environment changed and they gave back their money and they weren't able to make those adjustments. So for me, the same thing happened just at a professional level here at T3. And I was able to find mentors at the company who helped me make the adjustments that I needed to make. My time frame got bigger. I started doing a lot more with charts, a lot more with technicals. And next thing I know, I'm holding positions overnight. And now at this point, I don't think I've gone home flat with no positions in like 5 or 6 years. I've always got stuff on overnight. So it's been a literal 180 in how I've traded over the years.
That's fantastic, man. Yeah, and I think that really speaks volumes to just the concept of community in this industry, and not just any kind of community, but the kind of community that you're talking about, like that fosters growth. You've got a lot of wiser traders there when you're first starting out, and it can kind of help you, help bring you along. How important is that now that you've kind of like shifted your role from that guy that needed those mentors to now you are the mentor? Like, what do you see are some of the more common mistakes? I know you mentioned that one line there that you don't manage risk. How is the turnover rate? I mean, are these guys coming in and really kind of hitting their stride, or what's going on?
Sure. So one of the things I'm always very upfront about, trading, whether it's on a professional level or on a retail level, if you're trying to do active trading, this is a very difficult business. And a majority of people, again, on the professional side or on the retail side, a majority of people who pursue this business do not become successful at it. And that's despite the amount of work that I do, that T3 does, to try to help every more entry-level trader who is joining the company to be as successful as possible. I can't promise that any one individual is going to be successful as a trader. I can promise for anyone who works with me that at the very minimum, you're going to learn a ton in the process, but I can't promise that, hey, you are going to be the guy who, becomes the next, 7-8 figure trader. We'll see. You have to have the right personality. And first and foremost, it's going to be that discipline with risk management and money management. I have seen over the course of my career that a trader's ability to manage risk and manage money is significantly more important than a trader's ability to actually trade. I've seen guys who are great traders. They can read a chart really well. They can execute really well, not become successful because they don't know how to limit their downside. They always have to be in that next trade. They're going to fight to make back their P&L. They're going to fight the market. You're a great trader. Eventually, you're going to get caught in something if you're not managing your risk properly. And I've also seen people who are more mediocre in terms of trading skill become very successful as traders because they focus on their risk management. And then the trading skill improves and evolves over time. It's like playing a sport. The more you play that sport, the better you're going to become at it. It's a repetition, skill-based exercise is really what trading is. And then, next to that is going to be work ethic. There's a big phenomenon going on right now that I'm not a fan of, that you see in like social media and things like that, of people treating trading as like a get-rich scheme. You can, it's a half hour a day and you're going to be the next bajillionaire trader. Man,
I had a nickel every time I heard that.
I wish it was as easy as that. I wish it was easy. And as a matter of fact, I really recommend to people who don't have the time to focus on their trading pretty much full time to not trade. This is too hard, even if you're going to be devoting yourself 12 hours a day to it, let alone if you think that you can spend 45 minutes a day and figure all this stuff out and really become a successful trader. If you don't have the time to do it, you're probably just going to lose money. You're better off being a dollar cost averaging investor into the marketplace and just working on building wealth for your long run as you focus on whatever your actual real career is. But if you want to be a trader, you're going to have strong work ethic. You're going to have to focus on this. When I first started with T3, I was the first person to get in the door. I was the last person to leave every day. I was here from 7 a.m. to 7 p.m. at a minimum every day, doing a heavy research process, trying to figure out all the things I don't know, and staying well late after the market closes, keeping journals, keeping statistics. I would find anybody I could who was more experienced or even equally experienced to me to pepper them with a few questions about trading. I remember I would see a guy like Scott Redler or, some of the other big traders here at T3 leaving for the day, getting in the elevator, and I would quick fake shut down my computer, make it look like I was leaving also, throw my jacket on, hop in the elevator just so I could take an elevator ride with these guys so I could pepper them with a few questions, try to build a relationship with them. I'll appreciate your time. And then I would take that elevator right back up, turn my computer right back on and get back to work. That's the type of work ethic that I think that you have to have if you're entering this business for the first time and you really expect to be successful.
Wow, that's gold right there. Need to make a little 2-minute Twitter clip out of that once we get done.
Let's do it.
No, I mean that's so true. You can't really expect to come in and there is a thing called luck and there's beginner's luck. And sure, like you were just saying, like, hey, I might take an account from 10K to 500K in a really good bull market, but what's going to happen when the market shifts? And I think that it sounds like you figured that out in year 2 for yourself. Now, were you actually a full-time trader or did you have like a side gig in those first 2 years?
So I was a full-time trader. I was actually also a professional fighter at the same time.
Oh, wow.
I fought professional kickboxing for about 10 years or so. I've been in martial arts for 30 something years at this point. I'm retired now. I retired maybe 3 years ago. But okay. I won 2 world titles in 2 weight classes. I had 12 round fights. I fought people from all around the world. So my entire life for the first 6-7 years or whatever that I was at T3, all I did was train for fights and train for trading. I had no social life. I had nothing else. I was dead set focused on just those 2 goals of being the best trader in the world and being the best fighter in the world. And that was it. Awesome. T3 was actually a big sponsor for my fights for a long time also. Cool,
man. Cool. That's really that's awesome. So it sounds to me like there's there's a theme, with a lot of traders that they they kind of find that discipline somewhere else in their lives as well, so it seems like you were really disciplined as an athlete. And then do you think that kind of spilled over into that focus that you had for trading?
100%. I tell people about kind of those dual careers I was doing there at doing both things at the same time. And they'll ask me, how is that possible that you had the time to be a professional athlete and a professional trader at the same time? But they really fed off of each other. I had been journaling for fighting, right? It was something I first had learned about from Kobe Bryant. I heard that Kobe, one of the best basketball players of all time, would keep really strong journals on his games, what his coach told him, his practices, all that stuff. And then he would go back and review it, and that would help him, be a better basketball player. So I was doing that for fighting. And then I was like, oh, okay, well, trading is a performance-based activity as well. I need to be doing this for my trading in the exact same way to help me go to the next level. So they fed off each other. And I'll tell you, you have a bad day of trading, there's nothing like getting out there and kicking somebody in the face after that. So
yeah, I was going to say, it's a nice release when you have those bad days, right?
Yep, for sure.
That's awesome. Well, speaking of some of your colleagues there and I was thinking like maybe competition wise, as far as like sports go, I remember seeing something on Twitter not too long ago with like you and Redler doing a push-up contest.
Yeah.
Who won that? I'm curious.
Well, I'll tell you the real exclusive story about this that most people don't know.
Give us that. Yeah, give us the backstory here.
Anybody in? The champions. All right. On your marks. On your marks.
So, this is, of course, after a couple of beers here, we got the whole team, obviously, Scott's an athlete, I'm an athlete. They want us to do a push-up competition. And, I kind of whisper in Scott's ear, I'm like, why don't we, let's do this competition, but I'll tell you what, let's make it a draw. Like, we'll just make it a draw. Like, it'll just be for fun and it'll just be a tie. And I said to him, give me a number on how many push-ups you can do. And I'll just match the number and we'll be good. And, so he goes, all right, how about 55? All right, 55 push-ups, no problem, Scott. Let's do it. And then, sure, we'll do it. We'll do it. Everybody gets all pumped up. So we start banging out these push-ups and we get to 55 and we're going like kind of one for one, get to 55. I look over at him like, okay, this is where we both pretend like we can't do another push-up so we can have this, fun tie like we agreed on. And I look over at him and, Scott,
he's still going.
He just starts banging out like another 10.
Oh, man.
And I'm like, dang it, man. All right. Sorry,
he tried to trick you.
Now you're gonna have to lose, buddy. I'm sorry, man. So, I see him do like another 10. So I bang out another 10. And now he's struggling. And he does that next one. So I do that next one. And then he's like, gets that next one in. So I get that next one in. And then I look over at him and I just do like 5 more. And then that was it.
You rubbed it in, man. He set you up.
Yeah.
Let's do 55. And then he goes like 60.
He got what was coming.
That's awesome, man. Sounds like you guys have a nice little healthy competition and relationships there in the office.
Yeah, Scott's a great guy. When he was coming to the Manhattan office, we would sit across from each other for years here. So awesome. he's in one of our smaller New Jersey offices since COVID hit. And like I said, I'm going to be part of the year remote and part of the year here in the office. But we have a great relationship.
Good stuff, man. Good stuff. Why don't we transition into some charts and just maybe show us a little bit of maybe some recent trades, talk about your risk management, trade style, stuff like that. How does that sound?
Sounds good. Let's do it.
Nice. So I've got it on DKNG here because I think you were mentioning recently that you had taken a position here. Why don't you talk us through this? And
Sure. So my approach to trading is big picture down to small pictures. Let me start by saying that. So I'm always starting by looking at the macro environment of the markets, the S&P, the NASDAQ, and the Russell in particular are what I'm looking at. I don't really spend too much time looking at the Dow because it's only 30 companies. I'm paying attention to money rotation. I'm paying attention to relative strength, relative weakness. I pay attention to seasonality. I obviously pay attention to trends and technicals. And then I kind of put that together. I like to do a lot of daily and weekly chart analysis on individual stocks, big picture analysis, and then I like to execute on the smaller picture. So what I tell my traders all the time about what I'm doing is everyone talks about their risk reward ratios, right? I want to make 3 times my risk, 5 times my risk, 10 times my risk, whatever it is. A lot of what I'm trying to do is find risk on small time frame charts, a 5 or 15-minute chart worth of risk, but find reward that's going to come from a daily chart. So I look for these daily chart type executions. Like a simple example would just be like a breakout. I find a daily resistance level. I look for that daily breakout, but I'm going to be managing my initial risk based on like a 5 or a 15-minute chart. So that's a lot of how I put things together. So DKNG here is one of the stocks that I put into a list of spec stocks, speculative, high multiple growth stocks, many of which peaked in February of 2021 and have just been decimated for the rest of the year, particularly in the last few months, just destroyed. I have a list of these speculative stocks. It's a big list that my traders and I look at. On average, those companies are down anywhere between like 50 and 85%, depending upon which names you're looking at specifically. Yeah. And then they have, and you can see it here in this DKNG chart, then they've gotten particularly crushed in the last couple of months. I mean, this DKNG that you got up, this was basically a $50 stock in the beginning of November. And then, by the end of December, it's down another 50%. 2 months later, it's, at $26, another 50% down in 2 months. I mean, that's just incredible down moves. So first of all, let's think about the big picture on what's going on with these spec stocks. Why have they gotten so destroyed? The first point that I would make is that the beginning of 2021, these names were in bubbles. They were in bubbles. You had these speculative companies, many of whom don't earn any money. Some of them were up over the course of a few months, 200, 300, 400%. Your DKNGs, your Palantirs, your Jumais, like that whole list of stocks. None of these companies belonged where they were in January or February of this year to begin with. So it makes sense that they have come down. Now, like a pendulum that swings back and forth, you see extremes in both directions. And now it almost seems to me like now that these companies are down 75, 80%, that we've actually started to reach to that other extreme where maybe there's good buying opportunities. Now, what particularly caused these names to get destroyed in November and December, these last couple of months, where in DKNG, we basically just said is down 50% in 2 months alone, kind of coming into the beginning of January, is a few major things. One is the anticipation of higher interest rates. So again, just think about how my brain is thinking, right? I'm starting with these big picture thoughts that help me develop more of like a qualitative fundamental thesis before I even dive into the specifics of execution. I need to have an understanding of what's going on here. So first of all, we've got this threat of higher interest rates that's coming as a result of inflation. Well, higher interest rates are particularly bad for non-profitable companies. Why? Because if you're a company that doesn't make money, you are reliant on raising money.
Yeah,
and exactly, you have to constantly be raising more and more money. And well, guess what? Money has been basically free for like the last 10 years or whatever it is now. Interest rates have been zero. Money has been free. It is super easy for any company that's out there that has a hope, a dream, and an idea to raise millions and millions and millions of dollars to continue their operations with the thought process of like an Amazon or a Tesla, or they can eventually come to scale over time and become these, amazing companies that can be huge profit engines. They have to get to that point first, and that requires them to lose a lot of money. Now, all of a sudden, interest rates are going up, or could be going up. That's what the Fed has kind of foretold here. You can't get that money for free. And that's going to crush these types of unprofitable companies. And it also crushes stock multiples, right? So the multiple in which you trade at, markets are always in competition with one another. So the bond market has not been a great place to put your money because there's no return. What are you going to go buy treasuries and not even be able to keep up with inflation? So that makes stocks have a competitive advantage to bonds. But as interest rates go up, and when those stocks have that competitive advantage, it means that they're going to trade at a higher multiple. All of a sudden, they're losing that competitive advantage because interest rates are supposed to be moving higher. The market's anticipating that, so you have multiple compression, and you have this idea, maybe these companies aren't going to be able to raise money forever, and you get this huge down move. That gets compounded by the fact that a lot of people have lost a lot of money in 2021 in these names because they've gone down so much. And it's not necessarily a bad idea to realize some of those losses for the tax benefit of having that loss on your books. Yeah. So they get particularly hit hard here in the second half of November and December because you not only have the threat of increased interest rates, but you've got tax loss harvesting that's coming into play as well. So when can this abate? That's the question I'm asking myself on a big picture. When can that potentially end? Well, tax loss harvesting, now we're having our conversation here on January 4th. That's done with. You can't do any more tax loss harvesting for the year 2021. Those sellers are going to be gone now. Now, you still do have this threat of increase in interest rates, but we know that the market's a forward-looking mechanism. So the market prices that in at a certain point. And I would like to think that at this point, with these stocks being down, like I said, 50 to 85%, depending on which name that you're looking at, that threat of increased interest rates may now be largely priced in. So that then leads to a thought process of once we get through this tax loss harvesting, and this, by the way, is the definition of what like a Santa Claus rally is. First of all, I've never heard that term used more. I've been in this business for a while. I've never heard that term used more than I heard it used here at the end of 2021. All of a sudden, everybody and their mother is looking for the Santa Claus rally, and they're looking at Apple and seeing Apple uptick and saying that's a Santa Claus rally. That is not what a Santa Claus rally is. The Santa Claus rally is a result of what's called the January effect. The January effect is a result of tax loss harvesting. So basically what happens is people realize those losses in November, December, and then they bring their money back into those stocks, maybe potentially in January after they've already kind of realized those losses. The money comes back in, and at the same time, so now you've got buying and you don't have the selling anymore. So you'll oftentimes see a pop. So specifically what the January effect is a move in beaten up stocks from the end of the previous year. That in time, historically, led to this concept of what we call a Santa Claus rally, which is the front running of the January effect. So again, like we said, markets are a forward-looking mechanism. Basically, markets aren't stupid. So they understand, all right, well, these types of stocks usually go up in January, so I should probably buy them in the last week of December. And by the way, the Santa Claus rally is not a rally that's supposed to happen the week before Christmas or all of December. It is specific to the last week of the year.
Okay.
December, the last week of December into the beginning of January, and then potentially that January effect that I'm talking about kind of take over.
That's good to know. So if I'm understanding correctly, then you're kind of like looking for like somewhat of a climactic sell-off. And then in the absence of that supply, that overhead supply, now we're looking for demand to kind of start coming back in and giving you some rallies.
That's exactly right. So this is all, everything I'm talking about is all kind of more theoretical. It's more of what I call a qualitative fundamental thesis. So the way that one way that I describe my trading is 85% technical analysis and 15% fundamentals. But the fundamentals I'm doing I'm not sitting here analyzing balance sheets. It's more of an understanding of what does this company do? How are they positioned for the future? What does management look like? And all of the things that I'm describing to you coming into looking at like a DKNG or a Fubo or any of these other speculative names right now.
Yeah.
So
sounds like it all kind of works into your big picture idea.
Right. Right.
Yeah.
So now I got the big picture idea. So what do I do? Do I just close my eyes and press the buy button? Absolutely not. Because I'll tell you what, I'm wrong all the time. All right. And any trader that you speak to who says that all they've ever known in their career is sunshine and rainbows and they're never wrong, that person is lying to you and you should run in the other direction. I am wrong all the time, but I have risk management in place for when I'm wrong. And I'm putting myself in a position for those risk reward numbers to work out where when I'm right, I'm going to make a lot more than when I'm wrong. And I can make a living doing out of this. I tell traders all the time, being a successful trader is as easy as making more money than you lose.
Yeah.
All you got to do. You got to do is make more money than you lose, right?
Great advice.
So that's the whole thought process coming into this. But now we need to see some sort of technical catalyst, some sort of technical setup into the end of December here that can enable me to get in. And what do we know? We know this thing is in a heavy descending channel, right? From November into December, you can just play the connect the dots game here. It's been in a very heavy descending channel. So what is like a capitulatory action that could create some sort of base for us that this stock could jump off from? So the first day we had here was December 17th, which you can see is that high volume green Maribozu that you've got right there in the middle of December, where it's trying to get above the line that you kind of just drew there. December 17th there, so that you have that low. So stock makes a new low there, so it shakes people out, a little bit more, so you get some more sellers out of the way, and then closes really strong on higher volume. But I use an 8 and 21 EMA on my charts here. It closes right into the 8 EMA, which can act as, I don't like calling moving averages resistance levels, because I don't think that moving averages are support and resistance levels. They're literally just squiggly lines. So at 8 and 21 EMA is what I have in here, exponential moving average. So on that day that we're referencing, stock has a really strong snapback, and we were able to see opening momentum right away in the beginning of the day. And I'm already starting to keep an eye on these stocks to see if they can give me some sort of signal here to get long. So I initially get long that day. The next day is an inside candle.
So where did you get long? I'm curious.
Exact pricing, I don't recall. I think it was a little bit above $26.
You think it would have been on the reclaim there around 26.50 from the prior day?
That's a lot of what I would do. So yeah, it was a little bit above $26. Sometimes I actually will get in even ahead of that price. I'll look again. I like I mentioned to you, I'm looking for the big picture as reward, but the small pictures for execution. So if I'm anticipating that we could get like we call like that red dog reversal type trade where it snaps back through that low, if I'm anticipating that's going to happen, sometimes I'm even able to look at like a 5 or 15-minute chart to get into it when it looks right before it even happens. So you're anticipating that trade is going to occur as opposed to reacting to it even after it occurred. That's one of the ways where maybe sometimes I can get better risk rewards than my buddy Scott. Anyway, so, that was a great initial entry there. And then it gave, kind of an inside day. That's the next day. It's an inside bar. An inside bar is a period of rest. And then it breaks the inside bar to the upside and retraces even further. The thing is looking phenomenal. My concern was I thought it was still a little bit too early in the month, right? We're not quite yet going back to that qualitative fundamental thought process. We're not quite yet into where that Santa Claus rally should be coming in with these beaten up stocks. It feels to me like it's starting a little bit early. And then you can see, the thing creates a little bit of a pivot high, which is another lower high in this bigger picture downtrend, and works its way all the way back down to just about to those lows. But those lows never actually breach. So if your stop loss is the day low from where you've got that nice blue arrow there, you actually never get it triggered. And this leads to Thursday of last week, which is also a really strong Maribozu, and where once again, Thursday of last week, now is when I'm actually really looking for the Santa Claus rally. And again, we always want to be having this in conjunction with what our markets are doing. The market just had a huge rally. The SPYs are starting a bull flag on their daily chart. I'm paying attention to that at the same time. And I know now we're in the right time of the year here where based on the qualitative fundamental thesis, I can get that move. So that next green bar there where you have your second arrow was a great day to add to your position if you were already in, or to initiate a new position if you weren't in previously. So that day where you have the second blue arrow, man, technically I was on vacation last week. I still traded the open. I traded till like 10:30, 11 every day. I was up in Vermont and Airbnb, trading the open and then going skiing. Ski conditions weren't great. It was super icy, unfortunately. But I bought a ton of spec stocks Thursday of last week because the opening momentum was great. I bought DKNG, I bought Peloton, I bought Fubo, I added to a SoFi position that I was already in, I added to a Coursera position that I was already in. I was like, I needed more hands because I was so excited by the price action that I was seeing Thursday of last week. And I'm thinking, this is finally it. I think maybe I finally got it. And maybe now there's actually a speed bump that's hitting in the whole qualitative thesis that I have. So I'm really bullish right now, big picture. Let me take a half step back and say that because it like I said, it comes from the big picture of the markets, what I'm looking at from the SPYs, the Qs, and the IWM, and then it breaks down into the individual stocks. I'm long 14 stocks right now. Some of them are pretty big positions, even as we're having this conversation, and it's diverse. My team is looking at banks. My team caught a great trade in Ford yesterday into today, Bank of America yesterday and today, JP Morgan yesterday into today. Interest rates went up big the last couple of trading sessions. So yesterday was the first day in January, the first day of the new year. And it was like a full risk on day. You could have bought almost anything yesterday and made money. Everything was going up. The banks crushed it. Energy names crushed it. Spec stocks, for the most part, held up really well. Apple, Tesla had their car numbers and was through the roof yesterday. Apple had a big move yesterday. Everything was up. And that was under the surface of it, though. Interest rates finally gave a big move yesterday. Well, interest rates, when they're going up really big, again, what we're talking about, that's going to tend to give you strength in the banks, tend to give you strength in energy. It's going to tend to make it tougher for these types of stocks. So I'm still kind of in a full bull mode thesis right now until the market proves me that my idea is wrong. I want to be long both these spec names and also bank type stocks and energy type stocks at the same time, because they both have different factors, I think, that are feeding into them. these types of names potentially have that January effect, but they're getting hit now, and they're getting hit today based on the increase in interest rates. Whereas banks and energy names are just totally ripping here through the roof. So I'm actually,
where are we today? Because like I was saying earlier, we download data end of day here. What do you think the current price is?
right now, DKNG is at 26.30. So it's having a pretty weak day, as are a lot of the other spec names.
Okay.
And I'm getting stopped out of a couple things here, a little bit. Like Peloton made new lows again. So this is why we have to have risk management, right? So you can see there on the executions, those are great entry setups.
Yeah.
And there's huge reward potential for this DKNG if they can break their downtrend. And one of the ways in which I teach people to think about markets is in terms of if-then statements. If what you're looking at is a double bottom, and it kind of looks like it could be, the way you would have a confirmation of a double bottom would be if DKNG is able to get above 30.71, which is the high from December 22nd.
30.71.
Yes, 30.71. It's the pivot high from December 22nd. Let's do an if-then statement. If DKNG finds support here around $26 where these two lows are, and then breaks above 30.71, then it is also breaking its descending channel. And then what kind of upside can we be looking at? Well, I see resistance levels at $36. I see then a resistance level at $42. Huge potential reward here. So what do I want to do when I'm executing these trades at those two blue arrows that you have here? First thing I want to do is I want to cover my risk. What I am always trying to do is put myself in what I call a win-win situation. So I nailed those entries on those 2 days really well, and the stocks went up. Well, guess what? If I don't sell any and then they go down, I'm going to take a loss. But if I take off a percentage of my position on the way up to at least cover my risk, if the trade then will fail, I will lose nothing or possibly even make money on a failed trade. That's my number one goal. It's like I said to you earlier in the podcast. You press the buy button, the stock goes up. You are perfectly right. You make a ton of money. That's easy. Yeah. Anybody can do that. Show me the trader and how they handle the situation where the idea does not work out. And I'll show you the difference between people who are successful from people who are not. So you look at this DKNG, you take those two trades at those two buy points, you get your risk covered. Now, what's going to happen from here on January 4th when we're having this conversation? Maybe the trade fails. It breaks those lows. It makes new lows. I get stopped out of my position. Guess what? Guess how much money I'm going to lose? Nothing. Or possibly even make money because I was able to execute well to begin with and cover my risk. That's now my worst situation.
Did you take a little bit off then?
Yeah, absolutely.
Like the 30-50s or something like that?
Started even earlier than that.
Okay.
I will take off a percentage of my position based on risk reward. So I'll usually take off a little bit at 1-to-1, a little bit at 2-to-1, a little bit at 3-to-1, just a percentage. Cool. And then I'll try to hold anywhere from 10 to 50% of my core position for the big move. The big move is where the big money comes from. Yeah. But the big move is the last step in the process. The first steps are having a game plan for what am I going to do if this trade fails? What am I going to do if the trade works a little bit and then fails, which potentially could be the situation here in this thing. So I get my risk covered in those pops by selling some, and now I'm holding that other 10 to 50% of my position for that big move. So gotcha. Now here's the scenario. Scenario 1, trade fails, I get stopped out, I lose nothing. Scenario 2, trade works. Double bottom comes in, I get a move to 36 or I get a move to 42. I will still have stock at those levels if I follow my game plan correctly and I'm disciplined. And now all of a sudden I have a phenomenal risk reward where maybe I got into these positions initially for 25, 30, 40 cents risk, something like that. And the reward that I could make, if this thing goes to $36, that would be a $8 reward. If this thing goes to $42 where there is, resistance, I mean, it was just at $50 in the beginning of November. It's not impossible. If this thing goes up to, $42, now I'm looking at a situation where I risked whatever it was, 25, 30 cents, and I end up getting reward of $16, $17.
Nice.
And this is what I'm talking about when I'm talking about looking at that intraday risk for that daily chart reward. And then
Yeah,
also,
so you're
though,
basically, I mean, if this thing commits below pretty much like the wicks of these candles here, you know, then you're dumping it.
you got to get out of the way. You gotta
Yeah,
manage your risk.
but you've got, I mean, you can just tell by looking at that chart. I mean, you're looking to risk like, you know, $1 at most
Yeah.
for that upside potential of, you know, $10, you know, possibly or more.
Or more.
Yeah, yeah, that's
and you know,
fantastic.
these are counter trend trades. I normally am not a huge fan of counter trend trading. Counter trend trading is actually significantly more difficult. I really only start looking at counter trend trading in periods of what I think are extremes. So when I'm looking at a stock that's down 80% and I think it's a good company or whatever it is, that would be what I would start considering a period of extreme where I might start looking at these types of counter trend trades. But honestly, the easier, better money is to be long your Apple. I'm long Apple right now. Is to be long your Microsoft. I'm long Microsoft right now, and to be continuing to ride those trends on those daily and weekly charts. That's when you have unlimited reward, because who knows where it can go.
And you know, to that point though, I mean, it does look like the trend is becoming more and more bullish. You know, I'm seeing these downward thrusts here. I mean, if you look at this one, it's a nice big, you know, trend there, and then we're kind of like loosening up here, and this is just getting shorter and shorter and shorter, and then now we've actually put in a higher low compared to this guy over here. The other thing I'm seeing there, Derrick, is you've got elevated effort. You know, these volume bars here coming in, and we're finding support. You got elevated effort, finding support, and even though it's smaller, this candle right here, the effort comes in.
And keep in mind that last candle that you're pointing out there, that's smaller, that's a holiday week.
Yeah.
So that volume there is decent, considering that was the Thursday before New Year's. That's
true. Yeah. But even that one is it's higher than any red day prior to that. And then, you know, I'm hoping your position works out for you. But if I didn't see what was happening today, I would say this light volume pullback on this retest here looks pretty decent as well. So
I agree with you. You know, thought that this looked really good, and I actually had written down for my team to look for a new buy or an add buy through like 28.80 to 29 to 29 in DKNG for that next leg, but it never triggered. And if it doesn't trigger, then no harm, no foul, right?
Get out, right? Yeah,
exactly. You don't even get in. You can't take a loss on something that doesn't trigger, so because you never got in, right? So these stocks are under some pressure today because of interest rates. So you know, and that's why risk management is the most important thing, because you could have all this stuff that we're talking about, everything that you just pointed out, everything that I just pointed out, the fundamental thesis, and you could still have a trade fail. Because there are no such thing as 100% in trading. It's a game of probabilities. Maybe you have this A+ trade that's got a 90% probability of working and you want to load the boat on it. Well, you probably should load the boat on it because 90% is great, but there's still a 10% chance that idea doesn't work. And if it doesn't work, are you just going to hold it till zero till you're bankrupt, or are you going to manage your risk? You know,
cut your losses quickly.
Yep.
Yeah, great stuff, man. Wow, that's fantastic. Yeah, I learned so much there, especially about the interest rates, because I never really think about that, you know. And I guess it probably depends a lot on whether or not you're, or maybe it doesn't, maybe it doesn't, whether you're trading larger cap names, mid cap names, small cap names. I mean, do you find that do you trade all of them, or do you kind of stick to something in higher price stocks?
I have a realm of like 50 stocks I go back to probably very regularly, but I also consider myself to be like a little bit of a mercenary. I'll trade anything where I think there's opportunity for me to really be able to make money. And my focus is pretty broad. You know, I'll trade banks, I'll trade energy, I'll trade, you know, the FANG names and the mega cap stocks. I'll trade you know, these spec names that are really whippy as well, you know. So like I said, it's a big focus. It's a wide universe out there. Awesome,
man. Thanks so much for sharing that trade with us. That was fantastic. Sure. Good to get to know your style too, and like you were talking in the first part, it's just, you know, it's all about risk management. Yep, 100%. Cool. Well, I've got a question for you then. I
Sure.
like to ask my the guys that come on the show, even though you've been in a prop firm, like what would you say has been like the most humbling loss that you've had? Was it back in 2012?
So that was a really tough time. I've certainly, because I've become a much bigger trader over the course of the last 10 years.
Yeah, your
I've,
size
I've
has
had
increased.
I've had much bigger numerical losses on
Okay.
individual days. Since then, I had a situation where, it's funny, this triple D is such a high flying spec stock now, but I was in triple D some years ago, and I held a position into an earnings report, which I don't typically do, but I had a solid profit cushion going into the report. That's the one time when I kind of will. If I think I got, I'm already up 5-10% in this position. Let's say they have a terrible earnings report, they go down 7%. I'm kind of just giving my money back. It goes back to that, like,
what's the worst it could do, right?
Yeah, exactly. It goes back to that win-win situation. I think I'm in a win-win situation. They have a terrible earnings report. I give back my profits in it. I give back the 5 to 10% that I'm in the money on this position. But if it's a decent earnings report, then the opposite could come into play also. Holding stock into an earnings report is always gambling. But if you're going to gamble, do it with the house's money, right? That's kind of the thought process there. And man, I held this triple D into an earnings report, and it went down like 45% on that earnings report. And I had a big position in it, and I just saw the blood running down my screen, like how bad those red numbers were. And you just want to curl up in a ball under your desk and just I've certainly had some humbling experiences in this business over the years. I've had.
I would hate to be your sparring partner after that triple D loss.
Yeah. But that's, look, if you got to expect that coming into the business, and you got to stay even keeled. I've hurt myself both ways. I've hurt myself on the opposite side also. I've had periods of time in my career where I'm doing so well, and I'm making so much money, and every trade that I'm taking is working, that I almost get too loose with myself. And I don't put the same degree of, this trade's going to work because everything else is working, and I'll just take huge size in it. And I'm just going to make I'm up a ton of money, and next thing you know, it's like, oh man, they just lose 5 figures in this stupid trade that I shouldn't even have been in. And now I just gave back more money than I should have. Like, I've had it on both sides, but it's part of the business, and that's why it's so important. Every day is a new day. You have to come in even keeled. The market doesn't care if you made a lot of money yesterday, lost a lot of money yesterday, if your girlfriend broke up with you yesterday. The market doesn't care about any of that stuff. The market is an opportunity creating mechanism. So you just have to do what is right for your approach and do it consistently, and nothing else matters. Yeah. And that's really the key to it in a lot of ways.
So I think we're about out of time here, but I did want to ask you one more question on that, just kind of like in mindset and psychology. As a mentor there now at T3, you've got so many guys under you. Do you do any of that, like kind of like mindset coaching? Like, what about those new traders? And maybe there's some retail traders, who are obviously going to watch this. How would you coach them through taking those big losses? Is it maybe just going back to focusing on your one setup? Do you need to do more back testing?
Sure.
How would you coach that?
So I do a daily afternoon meeting every day for my team, and every afternoon meeting ends in a Q&A. And one of my favorite things to talk about, and I say this to the team sometimes, we probably spend a little too much time focusing on technical analysis. Technical analysis is great. It's really important, but we should be spending a lot more time also talking about psychology and talking about money management, because that's the key to it. But everyone always wants to talk about the next chart setup, right?
Yeah.
The first thing I would say to someone who took a loss that's outsized is why did you let yourself do that? Right? There was a mistake in your process. Or unless you got like randomly stuck in a news halt, which the probability of that is extremely low. If you took a major outsized loss, you made a mistake. And it's really important, and this is one of the things that's difficult about trading. You need to know the difference between doing a good job and taking a loss, and doing a bad job and having a gain, or doing a bad job and having a loss. Because because we are in a game of probabilities, it means that sometimes you will do all of the right things and lose money, and sometimes you will do all of the wrong things and make money. And that's what's so hard about it, is the way that the human brain is designed to learn is you touch a hot stove, you go, oh, that was hot, I shouldn't have touched that, I'm never going to touch the hot stove again. So in trading, if you just made mistakes and made money, you just reinforced in your brain that the wrong thing is the right thing to do. So you can't necessarily analyze every trade just for the result of the trade itself. So the first question you should ask yourself, if you took a loss in a trade, or even if you had a gain, is, did you do the right things here? If you took an appropriate loss and you did all the right things, that is a fantastic job. But if you took an outsized loss, that always means that there was inherently a mistake somewhere. There was a mistake with your game plan, there was a mistake with your risk management, or you didn't follow through with it. You played the, oh, I think they're just gonna shake me out of my trade, so let me get rid of my stop loss game. That game doesn't work out. Even the one time it works out, that game doesn't work out. So
I'll just sell into the bounce.
Yeah, exactly. So you have to actually analyze the trade for itself. And if it was an outsized loss, look, I've had my share of outsized losses. I've made probably every mistake in the book, and it's probably one of the reasons why I'm good at being able to teach people, learn from the things that I've done wrong. Just recognize it was a mistake, journal about it, think about it, reinforce it in your brain. Don't let it happen again. It's okay to make a mistake. It's not okay to repeat your mistakes. You made that mistake of pulling your stop loss once, and you lost $2,000 instead of $500 on your trade. Okay, fine, it's over. Don't ever do it again. And that's when you should really beat yourself up if you did. I think you should be hard on yourself sometimes.
Yeah.
You have to. It's the only way you're going to learn and move forward.
It sounds like, just keeping that review process going until you finally hit that consistency. So checking your what did I do wrong there? Instead of blaming it on the market and blaming it on this, on that, internalize that and say, what did I do wrong, and how can I learn from it?
It's always you.
Yeah.
That's the first, just assume it was you. Even if maybe it was the market or it was some of the other things, it wasn't. It was you. You're the reason why you took that loss. So figure it out so it doesn't happen again.
Yeah. No, great tough talk there, man. I love that.
Thanks.
That's awesome. Yeah. Cool. Well, hey, listen, Derrick, it's been a pleasure talking to you. Just, before we wrap things up here, why don't you tell our viewers how they can find you? And, if you're on Twitter or email, T3Live, tell us about you. How can we find you?
Sure. So I'm a professional trader at T3 Trading Group. It's just D Oldensmith at T3Trading.com is my email there. I also work with T3Live, which is a separate but affiliated company that focuses on education and media. So you can become a part of my virtual trading floor through T3Live by having a subscription there. I've recently started a YouTube where I'm getting a lot of mini lessons into that YouTube. It's called Derrick the Trader. Derrick, Derrick the Trader. And, we have a Twitter as well, which is at ProdeskVTF, which is my the name of the virtual trading floor, at ProdeskVTF. So you can find me in any of those places. We've got a really great crew. And John, I appreciate you for having me.
Derrick, I appreciate it. And one last thing, we will include a link to your ebook as well.
Awesome.
Down below. So thanks a lot, Derrick.
Have a great one.
Cheers. Hey, thanks so much for watching. If you enjoy our content, please subscribe to our channel and be sure to like our videos. Also, check out tradingsim.com/blog for more content.